All right. What is up, traders? What's up, tycoons? Super excited for today's video. Coming at you guys with another natural gas video. The futures went up 13% in the month of April. I dropped a complete video solely dedicated to April seasonality, and I told you guys that 69% of the time, natural gas is green during the month of April. And my shares are currently green, up a small amount on there. And I still actually have a hedge to the downside as well, just in case things continue to drop lower. We're going to cover a lot in today's video. There's lots of news, especially with Russia going on right now. There's also news in New York. We have some criticism against Joe Biden, actually, because, he really comes off as one of the most anti-fossil fuels, but there's been a lot of natural gas development and different things like that going on. All right, we're going to take a look at BOIL, look at the daily chart now. I normally go over my settings on TradingView, and I don't necessarily always show the Thinkorswim, which is really my main trading platform when it comes to charting and stuff. So, we're going to dive a little bit deeper than normal into some different indicators besides just the MACD and RSI. We're going to go over UNG. We're also going to take a look at the futures, guys. We're going to look at the big picture zoomed out, and then we're also going to zoom in and take a look at some of the key levels and, signs that I'm seeing here as well. So make sure to smash that like button, subscribe to the channel if you guys are new, especially if you're looking for a channel that's going to be covering natural gas weekly. I'm dropping at least about 2 to 3 videos on natural gas every single week. Now, full disclaimer, the content provided on this YouTube channel is for informational and educational purposes only. It's not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors, and trading in stocks, bonds, commodities, or crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. All right, in full transparency, I am long natural gas, but I do have hedges to the downside as well, just in case, things continue to head lower, right? The trend is your friend, and it's been a very bearish trend. Now, the first piece of news that I want to cover is Russia's gas exports. All right, they're expected to slide in 2023. It was once Europe's mainstay source of natural gas. Russia's pipeline exports this year are now likely to be half of last year's total, analysts in the Russian media say. Evidence is piling up about the steady disintegration of Russia's vital natural gas export industry since the country's invasion of Ukraine. Russian news reports estimate that Russia's gas exports by pipeline could fall as much as 50% in volume this year from last year. And last year was an especially bad year. So think about that. Now, the problems are not limited to gas delivered by a pipeline. The European Union is threatening to curtail imports of liquefied natural gas from Russia, which were the solitary bright spot for the Russian industry last year. Russia is likely to see some gain in gas sales to China and potentially to Turkey, now Moscow's largest customers for gas. Russia exports gas to China using a pipeline called the Power of Siberia, and it is angling to build another link. But at this point, China is just a fraction of the market that Europe used to be for Russian gas. But Kadri Simpson, the EU Energy Commissioner, has urged members of the bloc and European energy companies to stop buying Russian LNG and not to sign any new contracts with Russia. Some analysts are skeptical that the European Union would prohibit Russian LNG purchases, not least because big buyers of gas from the facility called Yamal LNG are Total Energies, one of France's most important companies, and Naturgy, a major Spanish energy company. We think it would become a real headache for the EU to do that, says James Waddle, head of European Gas and Global LNG Energy Aspects, which is a research firm. On the other hand, having largely gone cold turkey on Russian pipeline gas, European leaders may calculate that going without Russian LNG would be less damaging. So, that's what we're seeing, surrounding some of the news with Russia. Now, big news in New York. New York moves to become the first state banning natural gas hookups. All right. In 2021, about 60% of all New York households relied on natural gas for heating, while another 20% used heating oil, according to the EIA, which is the Energy Information Administration. New York state leaders reached an agreement late Thursday on the state's 2024 budget, which includes a future ban on natural gas hookups in new building construction. Under the budget deal, natural gas hookups will be banned in small buildings beginning in 2025 and large buildings beginning in 2028. The governor said in remarks that the budget insulates households from exorbitant energy bills while helping the state build a more sustainable future. Everyone knows we've seen the effects of climate change, the storms, the hurricanes coming to New York, record snow amounts. We're seeing the effects every single day, not just here, but across the nation. Our budget prioritizes nation leading climate action that meets this moment with ambition and the commitment it demands. Now, TC Energy, there was a big fire there that made a lot of news here recently. TC Energy declares force majeure on Columbia Gulf Nat Gas Station after the fire. The fire at the compressor station resulted from a suspected lightning strike during severe storms that occurred early on Friday. The company said in a statement, U.S. natural gas futures actually jumped from a negative 2% to a positive 7% Friday morning on the news of the shutdown. The market paired gains to a positive 2% by Friday afternoon on expectations the facility would return soon. The Corinth compressor station is making operational adjustments to allow a portion of volume to resume flows through the impacted segment of the system, TC Energy said. Now, oil and gas critics, all right, they have escalated their gripes against Biden, but many Green campaigners are lamenting administration actions that favored oil drilling and natural gas exports, all right? Putin's invasion of Ukraine in February of 2022 jostled the administration's energy rhetoric in view of natural gas, according to industry officials. European allies wanted to ditch their reliance on Russian gas, and the Biden administration helped by promoting an export surge that led to U.S. companies providing half of Europe's liquefied natural gas last year. Fossil fuels have also gotten a boost from some of the administration's domestic actions. Earlier this month, Energy Secretary Jennifer Granholm endorsed the energy security benefits of a nearly completed natural gas pipeline championed by Senate Energy Chair Joe Manchin, a project Biden's Green allies fiercely oppose. In an April Senate hearing, Biden's pick for chief economist, Jared Bernstein, boasted that the administration had permitted more oil and gas wells in its first 2 years than former President Donald Trump, which, that's really, really surprising when I heard that. To me, that definitely caught me by surprise a lot. Now, the June natural gas futures stay strong despite sinking LNG demand and mild weather. Natural gas futures ended the week on solid footing after notching 2 straight days in the green. Though the near-term outlook remains bearish, traders covered short positions ahead of the weekend. A fire on a small portion of a natural gas pipeline also fueled some of the early momentum for the June NYMEX gas futures contract, which settled Friday. I just discussed that fire with you guys right before we got into this. Though weather-driven demand continues to be largely absent from the gas market, supply has surprised to the upside. With little demand to soak up the supplies, more gas has made its way into underground storage. Though stocks ended the traditional injection season at sharp surpluses to historical averages, injections have also trended higher than normal in some weeks. EBW Analytics Group also noted that rapidly refilling European storage may draw increasing attention in the run-up to summer. Currently, market projections point to full storage by early September, roughly 30 to 45 days before the withdrawal season begins. This may weigh on expectations for late summer U.S. LNG exports. Now, my most recent natural gas video, I kind of outlined the two seasons that there are, right? You have injection season and you have withdrawal season, and they briefly just went over this in this article. Now, at a glance, production is still stubbornly robust. Maintenance takes LNG down, and the pipe fire creates cash chaos. All right. Now, Russia seizes assets of its largest former natural gas customers in reaction to some of the Western sanctions. Germany's Uniper SE and Finland's Fortum OJY disclosed Russia has seized their subsidiaries in the country and placed them under federal control. And so what we're looking at here is the monthly Russian nat gas exports to the European Union from August of 2021 to August of 2022. And the light blue right here is going to be LNG, liquefied natural gas, and then the darker blue is going to be pipeline. And you can see this sharp decline, guys. It's just been on a straight decline since March of 2022. All right. Now, natural gas prices are down, but the industry spirits are really high. The dropping price of natural gas hasn't tanked the industry spirits. While the spot price of natural gas has dropped by about 70% over the past year, natural gas producers and service firms have been telling investors in recent days that they see decades of growth for the natural gas industry as their product gains wider acceptance around the world, not just as a transition fuel, but as a destination fuel. And that was said by Lorenzo Simonelli, all right, CEO of oil and gas services firm Baker Hughes. Right now, now that we've gone over some of the recent news, all right, that's happened since my last video, we're going to start off here with the Boyle daily chart. Okay, so there's a lot on this chart. I'm going to break things down for you guys simply, as I mentioned before. I don't want to come off too repetitive with my analysis, so I've actually switched things up. So be sure to stick with me. Okay, the first thing that I want to draw your attention to, all right, is going to be the indicators down here to the bottom. So we're going to work our way up on the indicators, okay, and go over those, and then we'll go actually into the price action itself. And I'm going to explain everything on the Boyle chart, and then we're going to look at UNG and the natural gas futures next, and you'll have a good idea. So this first thing right here that we're looking at is the DMI, and the way I have it color coordinated and set up is green represents the buyers, okay? Red represents the sellers, and this blue line here is going to be the average. So this lets you know who's in control of the price action right now. And look what's on the bottom here for Boyle. It's buyers, right? And you can clearly see that represented in the price action, right? We're not seeing any strong upward movements. We're not seeing buyers in control of the Boyle stock. All right. So sellers are still in control, but they're losing momentum. So if you see here, it's trending down and it's getting very close to this blue line and crossing below the blue line. So if it crosses below the blue line, that means that the average is really going to be in control, rather not sellers or buyers, right? Now, we are in a bearish trend, so if the average is more in control, then it's going to sit in that average trend. But one thing that I want to highlight is, we have this box consolidation here. So I'm going to explain what this green box and what this pink box is in just a moment. But box consolidation, to put simply, there's three stages to a reversal, right? You have the downtrend, and then you get box consolidation, and then you get the reversal. Now, there's never 100% guarantees of a reversal, okay? So you have to keep that in mind. But there are three stages, and we're in stage 2 right now. We've been consolidating in this box consolidation for a long period of time, really since about the halfway point of March. Is really when we've been consolidating in here. And if you take a look on the DMI, right, look what happens at this point. You see the average is in control. So, we're not really seeing aggressiveness from the buyers or the sellers at this moment. Rather, we're just averaging out, getting that box consolidation, and we're going to be looking to see who ends up taking control. Are sellers going to spike back up and really take control of this thing? As you can see, when sellers were in control here and trending higher, that's when we saw a really large decline in the price of oil. Okay. So sellers are still in control, but they're losing momentum here at the moment. Now, the next indicator we have on here is the RSI. This is your relative strength index, all right? It's going to measure the relative strength of a stock at its given price, and we're currently below 50. That's what this dotted line is right here, and below 50 signifies that Boyle does not have a lot of relative strength right now. So, in order for us to really see a big push to the upside, right, we're going to start combining a lot of these indicators together. We need to see buyers in control, right? So we want to see buyers above, all right? We want to see the green line above the red line and above the blue line. And we want to see the RSI above 50. Above 50 means that we're on the positive side of relative strength and showing relative strength. Now, if we look at the next one, we have our MACD right here. The MACD is still below 0, okay? Now, we are starting to get some green ticks here on the histogram, okay, but we're not really seeing strong price movement, okay? We want to see the MACD get above 0, and we want to see this blue line here stay above and not do a bearish crossover to the downside. If it crosses below that yellow line there, then that could mean that we have another sell-off coming in Boyle. So pay close attention to that. Remember, guys, we are looking at the daily time frame. Now, the next indicator we're looking at here is our momentum SMA. So what we have in blue here is actually the momentum indicator itself. This purple line here is 0. So above 0 means bullish momentum, and below 0 means bearish momentum. And what I like to use the indicator for is for crossovers, right? So if you notice here, we get a crossover, okay? And the red line is your SMA, your momentum SMA. We get a crossover here, retest, and then we push down below 0 after we got the crossover. And you can see that Boyle had a very sharp move to the downside from $6 all the way down to about $3. So a 50% drop after we got that bearish crossover. All right. Now we did get a momentum crossover here, but one of the false signals that you can get with the crossovers is when it's still below 0, right? So it's crossing up above bullish, and it is trending upwards, but we're still not in positive bullish momentum territory right now, right? So we're starting the right trend that we want to see. And here recently, we actually did get another crossover above the red line, and we actually are slightly above zero. So we want to see our momentum indicator really continue to uptrend and really create some space and get far above that zero area, right? If you take a look last time when it finally crossed up above zero, that's when we saw that strong push on Boyle up to that $7.95, $8 region. Okay, so that's the main things that I'm looking at. Now, Boyle does have a daily gap up to fill at $6.93. Now, if you're not familiar with gaps, that's what this blue chart is, blue box is right here. It's a gap in between this candle and the very next candle. All right, there's a huge gap in between there, and these spaces on the chart are known as gaps, and they tend to get filled about 90% of the time historically. Now, when it comes to leveraged ETFs and commodity ETFs, the statistics may not be exactly the same there. So I kind of just use it as a frame of reference point. But when you're talking about large cap stocks or ETFs or index funds, typically, those gaps, they tend to fill about 90% of the time. So at $3.38, that is over a 100% move potentially on Boyle if we only simply fill the gap up to $6.93. Now we need to see lots of bullish signals. The only bullish signal we're currently seeing is that the momentum crossover has happened and that the momentum is above zero. And now we're not seeing it far above zero. It's literally just barely peaking up above zero. But that's one of the things that we're going to see if that can continue to build, if the MACD can get above zero, if the RSI can get above 50, and if buyers can take control. Those are going to be some other bullish signals. Now, I mentioned box consolidation and how I was going to break down what these two charts are. So what these are is these are one standard deviation. Okay, so we have the box consolidation right here. And box consolidation is a really, really great trade, okay? It's a good trade. About 80% of the times you can get winning trades playing the box consolidation. And so you're going to look for a breakout to the upside or a breakout to the downside when it comes to Boyle, right? And so we're still stuck in this range. And we want to see, can we break out to the upside or are we going to break down to the downside? It's going to be a pretty good trade once we break this box consolidation, either to the downside or the upside, whichever way you play it. There's going to be a strong chance that we're going to end up hitting the bottom of these ranges here once we truly get to that zone and get a breakout of the box consolidation. Now, one thing that's really, really interesting, if you take a look, the top of this box consolidation to the upside is the 38.2% Fibonacci retracement level, okay? Now, you use the fibs to identify trend continuation versus trend reversals, right? Because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So we have all of our major Fibonacci retracement levels here. And if we're able to break out past all of these, that's how we could potentially get a reversal, right? So if you move down, you consolidate in these areas and then break through and break out of these, that's how you can potentially get that reversal and start putting in a high and then a higher high. So $4.14, $4.87, $5.47, $6.06, as well as $6.80. Those are going to be the major Fibonacci retracement levels and be a really, really strong resistance point that you need to pay attention to on Boyle. So, feel free to pause the video, take screenshots at any time. So that way you guys can get some of these different levels. You can look at some of these different indicators I'm using and different things like that, okay? So that's pretty much it for Boyle right now. We're really just looking for the breakout from the box consolidation. If we do get a breakout to the upside, all right, there is a strong chance we're going to gravitate towards that 38.2% retracement level right around 487. So that's one thing that I'm looking out for, okay? Now, UNG is looking a little bit more bullish than Boyle, all right? And as we progress through these, you'll notice that, the charts, unlike Boyle, are showing a little bit more bullishness, right? And there's a reason for that. Boyle is, as I mentioned, is a leveraged ETF. And specifically these commodity ETFs related to natural gas, such as UNG and Boyle, they both suffer from something known as contango, which simply, just to briefly summarize it for you, give you an elevator pitch. They're buying more expensive future contracts and selling cheaper future contracts, right? So when it's time for the contracts to get close to expiration, or they're about to expire, they sell those contracts, and future contracts are more expensive the farther in the future you purchase. So they're always selling cheaper future contracts and buying more expensive future contracts. Now I have an entire video dedicated to the decay around BOIL, and really go over some of the myths as well surrounding it. It's a really great video. You just search Exactly Trades BOIL decay, it should pop right up. Enough about that. So as I mentioned, UNG is looking a little bit more bullish than BOIL at the moment. And we can see we did get that same momentum crossover above zero. All right, and it is above zero. The MACD is still below zero here on UNG as well. The RSI is much closer to 50. Okay, right now it's at 47.61. Very, very close to 50. It rejected 50 here twice. Remember, the more times you test the level, the weaker it gets. So, we're going to see if we can finally break through and start to stay above 50. Sellers are still in control here as well, but buyers are pushing higher. So if you take a look at BOIL, the buyers were much flatter, right? Why it's doing this, let me see real quick. Can you see that now, guys? So BOIL is much, much flatter, right? If we take a look at the buyers on the DMI, it's very, very flat, okay? But if we come over here and take a look at UNG, what we're seeing is we're actually seeing an uptick in the buyers, right? So the buyers actually crossed above the average. So the average is now on the downside. Sellers are losing control. Okay, they're still in control at the moment, trading at the top range, but buyers actually crossed above the average and they're in an upwards direction while sellers are in a downwards direction. So we want to see buyers ultimately take control and get above that red line right there. As I mentioned, the RSI is very close. The MACD is still below zero, but we are seeing a lot of green ticks here on our histogram. We have the box consolidation very similar. Okay, now the box consolidation range on UNG is already above the 23.6% retracement level at 715, and we got very close to our 38.2% retracement level at 7.7. Now if UNG sees a move to the upside, all right, and we break out of this box consolidation, most likely we're going to be targeting very near the 61.8% retracement level at 858. Below there we have 814, and above there we have $9.12. Now, similar to BOIL, UNG also has a daily gap up to fill at $9.27. So pay close attention to those levels. Real quick, before we move to the futures, okay, I don't want to make it seem like we're only going to get the bullish scenario here, okay? So yes, we can hit a breakout to the upside, and one standard deviation would take us up to about $8.50 on UNG. But keep in mind, guys, if we break through this box consolidation to the downside, we could see a downwards push below $5.50, really close to that $5 region on UNG. So make sure you're aware of the risks, okay? There's lots and lots of risks. If you guys want, you can email me at exactlytrades@gmail.com. I do one-on-one sessions via Zoom, and we can discuss BOIL, we can discuss UNG, natural gas, as well as many other things. A lot of my one-on-one sessions lately have been directly linked to natural gas trades, whether it's UNG or BOIL positions. Enough about that. Well, this is our future daily chart, right? And so we're zoomed out right now. And so I want you to see, guys, okay, the trend is your friend, right? And we've been in a very, very bearish trend, right? We tested the bottom of this trend line twice here, over here, and then over here and over here as well. And we've tested the top of this trend line multiple times as well. So it's very respected. And as you can see, we have, if I draw a line right here, which will be roughly the middle of this trend line, of this channel that we're trading in right now, you can see we actually are, in the upper half of here, right? So we're going to see if there's potential, if we can keep this momentum up and really get back towards the top of this range and potentially head towards that $4 level, right? Now, hitting $4 would be a breakout past the level, but we're going to see if we can gravitate towards there, maybe to that $3.50 level, maybe even $3, right? 250 is really the big resistance currently on the upside. One thing that I want to highlight, right, and one of the main emphasis of this zoomed out chart is the bullish divergence, right? Now, if you're familiar with my videos, I talk about bullish divergence a lot, but I only show the RSI typically. So what we're going to do is look at our momentum indicator, right? And so we have if you look at where this starts, right, we have lows, we have a low, and then here we hit 52-week lows at $1.94 on the natural gas future. So we've done nothing but make lower lows. but look at your momentum indicator, right? We're making lows and we're making higher lows, guys. So when, the price action is making lower lows, but your indicator is making higher lows, that's known as bullish divergence. So we're seeing that across multiple different indicators. We're seeing it on the momentum SMA, we're seeing it on the MACD, and we're also seeing it on the RSI. All three of these indicators have bullish divergence on them. And we've actually seen a strong push up from 194 up to the 2.39 area that we're at right now. Again, I mentioned we're roughly above the halfway point of this bearish channel, and we're going to see if that bullishness can continue, as we really haven't even seen that strong of a push up in natural gas. Rather just more of a retracement from some of these overbought, oversold conditions. Now, if we zoom in some more, okay, and really take a look from the bottom up at our indicators again, look who's in control on the natural gas futures, guys. It's the exact opposite of BOIL, right? So, if we go back to BOIL real quick, look, sellers are still in control here, but they're losing momentum, right? Over here on UNG, we see that the sellers are in control, but buyers are pushing higher. And we see that we have an uptick on the buyers here. All right. If we take a look at the next one and we go to the natural gas futures, the buyers just took control here recently, guys. So to me, that's pretty big news. All right. We're seeing buyers in control for the first time in a very, very long time. Now, we have to be cautious that it's not short lived. Okay. If you look over here, when buyers crossed up above sellers, it was very short-lived, and we ended up seeing a strong move to the downside, but the average was still on top, right? So this time we've actually crossed above sellers, all right, and buyers are completely in control of the price action of natural gas futures right now. Okay, we're above sellers, we're above the average, and buyers have complete control. The RSI is also above 50. Okay, so rather than we looked at UNG, it put in like a top here and then a double top here, and then was at 47. The RSI is currently at 55.99, basically 56. So we're in relative strength territory, showing relative strength. The MACD is currently basically at zero. Okay, it's at negative 0.0013. Let's just call that 0.00. Okay. So we're going to see now, can the MACD head into positive territory and continue to head upwards? And the momentum indicator here, all right, we've crossed over a while ago, right? So if you look, this is actually where we crossed over, all right? And we actually have seen an upward trend in price since then. We made it above, the zero line. And if you look at this really strong pullback that we had, all right, on this bearish engulfing candlestick right here, we didn't see any follow through from the sellers, and momentum actually stayed above zero and in that positive territory, right? So the natural gas futures look a lot more bullish than UNG and BOIL. Now, a big reason of that is the decay factor, okay? And I mentioned that I have an entire video dedicated to the decay factor surrounding UNG and BOIL. It's a really great watch, guys. It definitely is. I definitely watch that. If you're a little bit confused on why your BOIL or UNG positions may not be performing as well, it's really informative. All right. Now, currently, we're above the 38.2% retracement level as well. We actually held it as support. It was prior resistance right here. We closed on the daily chart right at that level. And then the following day, we opened up at this level and we were able to close above. Now, that level is going to be 2.358. Above there, we're going to be battling with 2.486. As you can see here, we weren't able to really close above there. Once we got above that level, there was liquidity on the sell side, and we actually pushed back down lower. Above 2.486, we have 2.613 and 2.771. Those are the major areas. Remember, guys, there's 3 stages to the reversal. All right, you have the downtrend, you have the box consolidation. All right, if we draw our box consolidation here on the natural gas futures, this is what our box consolidation would look like. And it looks very, very clean, right? We had the downtrend, right? Then we had the box consolidation, and we got a breakout, retest, and push up higher. And we've actually started a small uptrend, right? On the macro scale, if we zoom back out, all right, and take a look at the zoomed out chart, we can see we're definitely in a very large downtrend. But on a smaller scale, we are in an uptrend, guys, and officially, right? And so that means that we're creating a high and a higher high. We're creating a low and a higher low. So if we do pull back on the natural gas futures, essentially we want to maintain above 2.201 and create another higher low, and then look for a push up higher towards that 2.613 to 2.771 area and put in a higher high and continue this uptrend, right? And that would give us a little bit of a 5-wave structure to the upside. Really, these are the main things that I'm looking at when it comes to natural gas. I try to switch things up in this video. So if you're a regular watcher of my natural gas videos, let me know, do you prefer, these charts? It's a little bit more complex. I have a lot of indicators on the screen. I normally try to keep things as simple as possible for beginners and for, people who aren't really as, involved in technical analysis. But if you enjoyed these more and you like a little bit more of this in-depth, look into the market, especially with natural gas, let me know in the comments below, and I'll be happy to, include these type of charts in my future videos. I really appreciate you guys making it this far. If you made it this far, why haven't you subscribed yet? You're going to miss out on my next videos, okay? Also, make sure to smash that like button, share the channel with your friends, share these videos with your friends so that hopefully they can learn something new as well.